So the question John laid out is the global economic outlook, is the banking sector responding effectively? For me, to answer that question, I will make 3 points. So what is the economic outlook? What has been the response in the banking sector? And I will say a few words on the challenges and opportunities. As the Cyprus president mentioned this morning, the global economy is experiencing a period of extraordinary uncertainty. And this relates to the pandemic, the wars in Eurasia and the Middle East, and in the panels just before, I heard echoes of that, and the rising interest rate environment, as Elizabeth just outlined. Now, most of our projections on the global economic outlook, but also on the Cypriot economic outlook, were done before the recent developments. And they add pressure, or they could add pressure to inflation, weigh on the economic outlook, and that could have an impact on growth. And the projections have been revised slightly downward so far. Now, despite this global economic uncertainty, the economy has shown resilience, and also Elizabeth mentioned this earlier. This is also true for the euro area, and it's also true for Cyprus. The euro area economy and the financial system have proven resilient, and that despite an energy crisis and despite rising inflation. So Cyprus enjoyed a strong economic performance, and the economic projections for Cyprus, they may remain relatively robust. They are higher in terms of growth than the euro area average, and average annual inflation is projected to drop significantly in 2023, going lower than the euro area in Cyprus. Cyprus has also been fiscally prudent and able to create fiscal space. So this is the result of a cautious use of energy measures to support households. And public debt in Cyprus continues to decline. So one reason, and I think John actually had that in mind with the question to Elizabeth, one reason why Cyprus is in such a good position, but also the euro area, that relates to the reform efforts that have been taken over the last decade. They've benefited the economy. Countries, including Cyprus, undertook crucial reforms at an early stage. Now let me turn to the banking sector and what that means. So the tightening of financial conditions, particularly the rising interest rates, they pose challenges today. European banks and supervisors have made great strides in reducing risk and strengthening their resilience. Now, interest rates not only pose challenges, they also pose opportunities. And so they've strengthened banks' profitability and capital positions. The European Banking Authority, and Elizabeth also mentioned stress tests, conducted a stress test in 2023. And the results show that most institutions in the euro area can manage a significant deterioration of their loans, even under an adverse scenario. So that's the resilience we are talking about. Now, in Cyprus, we see that the banking sector reported the strongest position in a decade. Higher rates have boosted earnings, they drive solvency ratios above the euro area average, and so far, asset quality has remained resilient. Since the financial crisis, Cypriot banks have substantially de-risked their balance sheets. Rating agencies, and Simon will talk about that soon, have upgraded Cypriot banks. We saw that recently with Moody's and Fitch, and this is a clear reflection of the improved situation. Now, let me say a few words about one particular challenge to the financial sector. And I want to mention this also reflects what Elizabeth McGall recently wrote about in a blog, and that relates to NPLs and NPL resolution. So while the reduction of legacy NPLs has been significant on banks' balance sheets, they stay high compared to the EU average in Cyprus. Now, NPLs outside the banking system, they remain very high, and they weigh on banks' new lending opportunities and profitability as borrowers are not able to return to banks as viable clients. NPL resolution in Cyprus critically depends on the effectiveness of the foreclosure framework. numerous legislative proposals that could undermine the effectiveness of the foreclosure framework, and also the lack of implementation is concerning. So challenges to the foreclosure framework are delaying the workout of bad loans, and they leave a liability in the economy during times of economic uncertainty. The timing is not right. But let me now turn to the positive news. Cyprus returning to investment grade by all major rating agencies. So Cyprus' fiscal consolidation and reform efforts in other areas have not gone unnoticed. In 2010, the first of a series of downgrades resulted in the loss of investment grade for the country. And I remember this moment very vividly. I realized at the time that the efforts in order to get back to investment grade would take a long time. And so recently, when I returned from Cyprus, it was a Friday night, and we were all waiting for Moody's actually to upgrade Cyprus to investment grade. So I was waiting, and shortly before 12 o'clock on a Friday night, Cyprus regained investment grade for all major rating agencies. Now, this is incredibly important, and it's a major achievement, and it's a moment for celebration for the country, because it has meant many, many efforts of the people of Cyprus to get here. And again, I'm sure Simon will mention something about that. But for us, at the European Stability Mechanism, it's a reflection of the efforts that have been made, and it's a great step forward. Now, that positive momentum coming out of the investment grade is only the first step. And Elizabeth also mentioned that. It means that Cypriot governments of now and the coming years need to continue using this space in order to keep the positive momentum. That means, and the President this morning reiterated his 3 priorities, that means continued evidence of fiscal responsibility, a stable financial sector, and reform implementation under the country's reform plan. Implementation of these reform plans are key. So let me conclude. In the short and medium term, Cyprus could continue focusing on fiscal prudence, ensure fiscal buffers, and that could mitigate the expected slowdown of the economy under the current uncertainty. Now, in the long term, investment in modernizing the economy through digital technologies, and I think this is what Michael will talk about, and innovation are essential. And that will enhance productivity, diversification, and economic growth. And then finally, maybe it's just a fluke, but it's November, and it's 27 degrees in Cyprus. I've never experienced such a warm weather here around this time. So maybe to preserve future economic growth in Cyprus and in view of risks stemming from climate change, early adaptation action is important for the economy's resilience. The transition to green energy reinforces that resilience.
Thank you.